back to Lux Voyage Echoes. I'm your host Madhvvi, and this is episode 2, where we will be discussing building wealth with discipline, investment strategies for the long haul. Today, we are joined once again by Mr. Akhil Chaturvedi, Executive Director at Motilal Oswal AMC, who will share his thoughts on how disciplined investing can help build sustainable long-term wealth. Akhil, it's great to have you back. When it comes to building wealth over time, consistency and discipline are key, but everyone's investment philosophy is a little different, shaped by their experiences and goals. So, my first question is, what is your personal investment philosophy and how do you approach building long term wealth?
So that's a good question. I don't have any personal investment philosophy. I've been an investor now for about 20 years. I have total experience of 25 years. First 5 years obviously went into doing a lot of mistakes, did a lot of leverage, trades, future options, all these things to get rich as soon as possible. But obviously, as we all know, there is no shortcut to creating wealth. So the first 5 years, basically, I lost a lot of money. But in the last 20 years, just sticking to mutual funds, SIPs, plain vanilla investing, and that has really helped me a lot, in creating whatever wealth I've been able to create. Another big contributor to my investing has been obviously the ESOPs, which I've earned, and obviously that has also compounded the wealth over a period of time. But largely, I've been an equity investor. I really don't. I have not done asset allocation. So from that point of view, I'm an aggressive investor, and I would not suggest anybody to follow this path. But because I'm in this business for last 25 odd years, my comfort with this asset class and the long-term orientation is very, very high. So therefore, I can take such risks. So I'm a 100% equity investor for the last 20 odd years. But in mutual funds, largely most of the wealth creation has happened through SIPs.
That's fascinating. Now, when it's come to a long term investment, risk management is always a challenge. Let's move on to my second question. How do you balance risk and reward in your portfolio? And what advice would you give to new investors trying to build long term wealth?
So like I said, since I've been largely exposed to one asset class, really not tried to, so from risk reward perspective, I'm high on risk, and in long term, obviously, the rewards have been fruitful. But my advice to the investors would be that one must have a very strong asset allocation model for their portfolios. One needs to plan their finances, their cash flows, for short-term needs, medium-term, long-term needs. Have your own goals, and then plan yourself for each of these goals. Spread your financial goals between short-term. Let's say for emergency you need to have funds. Then any liquidity you need in the next 1 to 3 years, 3 to 5 years, and 5 years and more. And then depending on all of these aspects, one needs to decide the asset allocation, and then once that is done, you need to actually execute the plan in terms of how much you want to put in equities, how much you want to put in gold, how much you want to put in real estate, how much you want to put in fixed income. And once this asset allocation is done, you need to revisit this, let's say maybe on a annual basis, and keep assessing that how the investments are faring, and if at all there is any change in the goals, and if there is a need to do any rebalancing on the asset allocation side. So my view and my advice to all of you would be to think about asset allocation, and also consult experts, your financial planners, distributors, advisors, whoever you may have. But you need a financial coach to guide you through this journey, which will actually go on for next several decades.
Absolutely. The way you balance risk and reward through proper asset allocation and diversification is such a sound advice, especially for our new investors who might feel overwhelmed by the market's volatility. Your point about tailoring investment to individual risk tolerance is so important. It's not a one-size-fits-all approach, and understanding that from the start can help investors stay the course and avoid emotional decisions that could derail their long-term goals. Well, that brings us to the end of this insightful conversation. A big thank you once again to Mr. Akhil Chaturvedi for sharing his wisdom on how discipline and a strategic approach can help investors build wealth over time. I hope our listeners found this episode helpful and are feeling inspired to adopt some of these long term strategies in their own investment journeys. In our next episode, we will be taking a closer look to the navigating market volatility, what investors need to know. Stay tuned for that.